Well, near term, you're going to have the valuation technology permeate the business. When we're looking ahead, there are a couple of dominant players in the prop data space that we are looking at partnerships with. That hopefully I'll be able to announce something concrete here soon. And we have our eye on several acquisition targets. So I expect that Q2 is going to be another large step forward in the evolution of this platform.
Hey there, Midas Letter subscribers. My guest today is Jim Albertelli, president of Voxtur Analytics Corp. Jim, welcome.
Hey, welcome. Thanks for having me.
Yeah, Jim, you guys put out a, by all accounts, a real stellar quarter, tripled revenue, tripled EBITDA practically, and looks like you're on track to execute on your business plan just as you guys have always claimed you were going to. So give me an overview of the quarter and what are the bright spots in the future?
Yeah, so a couple things happened. Right on February 3rd, we closed the Voxtur proper transaction. So we brought really the title technology as well as several mortgage technologies all into and under one roof. So that's why you saw us broke it out, that we said had the companies been put together at the beginning of the quarter, it would have looked like approximately 2.7 million. We would have been even further ahead. But obviously that, it was just because it was a mid-quarter acquisition to finally get it completed. So that's why you really saw, the top line expanding, the top line revenue going up because of the nature of the business combination, and also seeing some of the advantages of the counter-cyclical technologies that are comprised within the group.
Yeah, fantastic. Okay, and so do you guys break out the revenue per sort of business unit at this point?
Yeah, when it's interesting. It's so funny when we're having these exact conversations because the nature of the metamorphosis is going from the data company and the tech-enabled services and how we deliver those ultimately to our clients to software as a service. So I imagine that what you'll see is an evolution in the financials as the business evolves. Streams, you see essentially the technology line, and then you see a couple of different business units, and we're aligning that today, how we're actually managing the business and what it looks going forward as it's software as a service. So we're having those conversations right now. We break it out by each business unit, but we're also breaking it out along the lines of tech-enabled services and then software as a service. So we're in that, I'll call it that transition, right, from data and tech-enabled services, which are, for example, the tech-enabled consulting component that comes with the tax business, for example, in Canada is one example of that, and really looking at it as now as our technology proliferates in the first quarter, which is another thing that you saw in some of these results, was the benefit of Gary's acquisition of Apex, having the tax technologies in the US and the tax technologies in Canada really coalescing, and you're starting to see the increase in the sales efforts. So we're at a pivotal juncture where we are looking ahead and saying, wow, we manage the business according to each of these business lines comprising a tech component, a software as a service component, for example, in title, where we provide a technology service to a third party, and then an actual tech-enabled services component or a consulting component to our revenue, and how we interface with a mortgage servicing client is different when it's a tech-enabled service versus it's a technology platform. And so you're going to see that evolution continue in the company. And as such, you'll see, we saw a slight increase in gross margin from the end of last year to Q1, and we expect that to continue to occur as more and more of it becomes tech enabled, rather technology versus tech-enabled services.
Mm-hmm. Okay, so which of the business units provides the greatest proportion of the revenue jump?
Yeah, so I'd say the greatest proportion of the revenue jump is really going to be in the valuation technology platform. It's
Okay.
really around our acquisition that we accomplished as well in Q1, which was the acquisition of the ANow platform. And remember
Right.
when we spoke earlier, I don't know if your callers remember or your listeners remember, but we essentially have acquired an end-to-end encrypted, route optimized, and that's the Uberization, and I call it route optimization, AI-enabled platform. It's the only one in North America, and we're having tremendous success with that. So I expect, and that's very, very high margin software as a service. The team that we brought in was around 14 people. It's around $135,000 a month to run their business, and the upside is tremendous because once you bake in this, I'll call it piping into the mortgage lender or servicer or investor, then no matter what kind of valuation you run, it rides that rail at a very high margin. And so really that I feel like is one of the biggest growth engines between maybe now and the end of 2021, and in 2022 then, and this could occur sooner, it could occur as early as July, but in the most conservative sense, 2022 you'll see all of this additional technology that's around default business, which has been dormant. And I think we talked about some of the tailwinds that the market just can't really unpack and appreciate, but it's the bankruptcy environment and the bankruptcy technology we deploy to major top 5 bank in the U.S. and a top 4 mortgage servicer. There are some technological products that are very high margin that are fully baked, built, no tech debt, that are sitting there waiting for the moratorium to burn off, and that's some of the additional tech tailwind that you see into 2022. But again, you don't get a sense of it, and that's why when you ask the question, I think, okay, well, near term, you're going to have the valuation technology permeate the business. When we're looking ahead, there are a couple of dominant players in the prop data space that we are looking at partnerships with that hopefully I'll be able to announce something concrete here soon. And we have our eye on several acquisition targets. So I expect that Q2 is going to be another large step forward in the evolution of this platform.
Sure. You mentioned the moratorium on mortgages, and that was serendipitous because my next question was, to what extent will the end of the moratorium on mortgages impact your bottom line, your top line, etc.?
It's scheduled to end at the end of June, and until I can get the definitive word on that, and it finally comes out, CFPB is looking at it in the U.S., and so we'll see if they determine that that's the case. Most of the mortgage lenders are of the position that based on the current economic climate, the home price appreciation, this is actually a time to release those mortgages so that people have the most options, right? Option to short sale if that's the case because there's hardship, option for first-time home buyers to get in the market because we have low housing stock. So right now it looks like July, but if that's not the case, that's fine. We're going to continue to add to our title business from the purchase money side of the business, rolling out our technology platform to increase that business. We're going to do the same thing. Tax continues to build, and taxes come rain or shine, good economy or bad economy. So the tax technology is going to continue to proliferate. And then the valuation component, to create those efficiencies, lenders are going to continue to look for opportunities to create efficiencies, especially as the rates tighten up somewhat. That's just going to be a tailwind for that platform for us. So I see those 3 product suites proliferating in either market. What we didn't talk about was our alternative to title insurance. I know we brought that up on the first time that you and I spoke. We are in the process. We've got the Freddie Mac approval. We've done, and our first loan has been in a securitization with that product on it. So that's a big deal to us. We are working through right now Ginnie Mae and educating the rating agencies on this, but it's a huge upside, a tremendous upside for the business. And what we provide at Voxtur is the technology to allow this process to occur efficiently and effectively throughout North America. So that's not baked in any numbers either. That's what we're working on, and again, gone through some of the regulatory processes. And that's why people say, oh, that company's an overnight success, and it takes years in the making, right? So very diligent, getting commentary from major mortgage banks and lenders, going and working through Fannie, Freddie, and Ginnie, I've already, basically worked with VA and FHA. Um, we know the product has tremendous upside. It's a single rate structure for most mortgages. It's less expensive. It helps first-time home buyers. It helps veterans. Since it's a singular rate structure, it's a good tool against racial bias. It's a great equalizer. So we feel very good as it gains more focus and as the Biden administration continues to work on their policy, that we're well positioned for the future.
Mm-hmm. What does the bankruptcy, the foreclosure universe look like right now in the United States? What volume of homes are in a state of foreclosure?
Well, I think the last number was that there were 5 million homes that were in some form of forbearance mitigation effort. But the net effect of that, they believe, is about 500,000 to a million homes really at risk. So while there's a 5 million number being bandied about, I think it's going to be 20 to 30% of that. Now, in the normal churn of the portfolio, maybe 1% to 2% might churn through your portfolio just because of life changes, different things happen. People go through all different life situations where this might impact them. So I think that we're going to see, it's not going to be 2008, but it's going to be, probably, right before the moratorium, maybe 2 to 3x. And for what we've built over the time they've been in moratorium, the efficiencies of scale, I think it's going to resonate very well for the Voxtur family of companies. And that goes for the valuation we have some special products that are tech products that are really proliferate when the mortgage foreclosures move. We have technology that manages defaulted loans. We have technology that helps traders take a look at the distressed asset and determine the NPV on the distressed asset by when it will actually liquidate. So we have tools and technologies that are throughout the default continuum that have all been dormant, and all of that is essentially found revenue to the bottom line.
Right. All right, Jim, that's a great update. We'll leave it there for now. Congratulations on the quarter. We'll come back to you soon. Thanks for joining me today.
Always great to talk to you. Take care. Bye-bye.
You bet. Bye for now.